Today's video is one of the most informative videos we have ever filmed, covering everything from the short-term price action to the weekly expectations, the macro charts, Bitcoin dominance, the altcoin market, the S&P 500, and even the implications of the Federal Reserve interest rate decision moving into next month. This is a video you do not want to miss. Let's jump on in. Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. A big shout out to every single Aussie in the chat. Happy Australia Day. Have a fantastic day celebrating our great nation. In today's video, we are taking a look at the current macro and short-term price action moving into February, moving into the end of the month and that very, very important weekly candle close. We're going to be taking a look at exactly what is happening on the short-term price action from key levels, structural formations, potential targets, and so much more. We are also diving deep into the upcoming economic news and discussing the relevance of this news and potential implications this may have on the future of Bitcoin's price action. And that is just a surface level scratch of all the content we're going to be going over in today's video. We have so much to be taking a look at. So before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us on VIP. You can find out more information about the VIP channel by clicking the pinned comment of the free channel, by clicking my name to contact me. Our first link being a 50+ month trading track record, and of course that second link being a 10+ minute video showing you inside the channel what you'll get access to and how it all works. We've been operating for 50+ months and have over 700 members, including access to a massive group chat. You'll also get access to that main channel. Check it out, guys. Let's jump into the content. So as we can see, there is a very, very important close coming up on the weekly chart for Bitcoin in just over 24 hours. This, of course, is going to be the close, which will determine whether or not Bitcoin is going to be closing above our prior weekly highs at around that 104,400 level, or if we are going to see yet again a failure to do so. We have also got the major economic news being the FOMC meeting, the interest rate decision in 3 days' time. This, of course, is going to play a massive role in determining where the risk asset market moves towards in the following month. Of course, we don't necessarily need to see the Federal Reserve reduce interest rates, but we do need to see the Federal Reserve during the meeting have a more bullish tone. If we see that bullish tone, the perceived systematic risk in the market will decline and the markets will rise. Moving into this decision, I would say the markets are in pretty healthy conditions. We are seeing Bitcoin holding currently above the prior weekly high, and we can see the S&P 500 actually breaking through its prior weekly high. This overall is a pretty decent sign. We'll come back and discuss this in just a moment. On the short-term charts, we're going to be taking a look at a symmetrical triangle formation when, if broken, could move the price to around 110 to potentially 116,000. So let's start on this market data. As we can see, 24-hour volume is down 35% at 132 billion. That is expected over the weekend, with liquidations down 27% at 160 million. Of the 160 million, 93 million have come from longs and 69 million have come from shorts. Taking a very brief look at the price action, we can see the price action has been chopping pretty aggressively since the 20th, so essentially the entirety of the week, and we have seen the overall volatility between those swings up and downs begin to decrease. We are seeing the price action begin to pinch towards an eventual apex point. Now this apex point actually ends at the end of the month. It ends on the 29th of January, which happens to coincide perfectly with the next interest rate decision. This doesn't seem like a massive coincidence. In fact, this seems very intentional. So we are looking for a directional move from this short-term level around about maybe during or just a little bit before this interest rate decision. We'll discuss that in today's video. Moving over to the S&P 500, the S&P 500 is looking very, very good here. As you know, we are watching for two things to be bullish on the S&P 500. We are watching for number one, a weekly breakout of the prior weekly high. Currently, the price action is above that. It is tick that off the list. We have done that. Number two, we are watching for a RSI breakout. We are watching for that downtrending momentum to finally flip positive. If we look at when we started this downtrend, we commenced this downtrend in July. We have had bearish divergences since July, moving all the way into January. This is around 6 months where we've seen exhaustion develop. And this is something that people get mistaken all the time. Even with the Bitcoin price action, we saw the same thing happen in this 8-month period. People mistake exhaustion with weakness. They are not the same thing. To an untrained momentum trader, they appear to be, but there's a big difference between the price exhausting and the price showing signs of massive weakness to the point at which the sellers are in control. We are currently seeing exhaustion with the price action of Bitcoin, but these sellers are not in control. We are currently seeing exhaustion with the S&P 500, but the sellers are not in control. With that exhaustion, with that selling pressure, the selling pressure is being absorbed, and if we see that momentum shift, it is likely to see continuations. Now, all of this heavily relies on, again, the economic news that comes out in 3 days. So we'll take a little moment, we'll take a little break, we'll come back into the video. We're going to be taking a look at the S&P 500 a little bit more. We're going to be taking a look at the interest rates. This is very important. We're going over this short-term symmetrical triangle formation and the potential targets for this move. We'll also be talking about this weekly close and implications on the daily, and we'll be taking a look at the total market cap, the altcoin market cap, and even discussing Bitcoin dominance. So before we get into all of that, go ahead and sign up to BitGet, BitUnix, or BingX with the links down below. These are the exchanges I personally trade on. You can sign up with my exchange links down below to get a lifetime trading fee discount of 15%, which can build up to 45%. Support yourself trading and support me making this content. We'll see you back in a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it. Now, we mentioned just before we played that quick ad that we were going to start by taking a look at the interest rates. Now, it's very important we understand there are a few different scenarios that could play out. Now, first and foremost, we have to understand, we'll do this very quickly because it's quite boring, the connection between interest rates and risk assets and the dollar and inflation. But of course, that interest rates, particularly the trajectory of future interest rates, this over here, this dotted line, formulates the basis of perceived systematic risk, which is essentially what does the market perceive in a future period to be overall in terms of the overall risk. If the market perceives the risk to be higher in a future period, it will likely correct in anticipation. If the market presumes the risk to be lower in a future period, it will likely rally because the market is future seeing. So we're just going to get that out of the way. If we take a look at the interest rate decision, we are currently expecting a pause in interest rates. As a consequence of us going from expecting interest rate reductions from being 5 to now 2 and now moving into a pause, this has created uncertainty since the mid-December period. If we look at the price action for Bitcoin since mid-December, what has we seen occur? We have seen again a top and we have seen the price action chop. We have not seen the price action break structural lows, but we have seen sideways consolidation and sideways volatility. Again, uncertainty in monetary policy goes ahead and reflects in uncertainty and chop and sideways price action for the charts. So what are we watching for mainly? There are two things we are watching for the outcome to be bullish and for the markets to rise. That is going to be number one, we see interest rate reduction. That is very unlikely, however, with around 95% probability, 99% probability, we see interest rate pause. But the one we are watching is for if they pause interest rates and then in the Federal Reserve press conference, they say, well, inflation came out better this month. We are seeing, the job market look healthier. We are potentially moving towards our target for inflation. And because of that, we will be more optimistic to more than 2 interest rate cuts in 2025. If they say anything of that variation or anything that alludes to that overall narrative, the market will rally as a consequence of perceived systematic risk falling and the market being future seeing, it will rally in anticipation of that. Now, with that, we will see the S&P 500 break upwards. We will see continuations. With that, we will see the Bitcoin price action likely break above this downtrend on the symmetrical triangle formation and continue upwards. So before we get into the rest of our analysis, we have to understand that a lot of next month's price action on the higher time frame really heavily relies on the narrative that the Federal Reserve is going to set in the upcoming meeting. Policy stipulates demand. So let's move over to one more chart and we'll come to Bitcoin. We have got our monthly return chart. Now, I don't really put too much weight on these charts, but it's something to take a look at. Historically, moving into the month of Feb, this is generally, besides October, the most bullish month for Bitcoin. Now, will that result in this month being bullish? I don't know. History doesn't always repeat, but sometimes it does rhyme. Something to consider at the back of your mind. Let's move over to price action. So we talked about the weekly price action, the weekly candle. The weekly candle will be closing in 24 hours. Very important we close above this level. If we do, that would essentially indicate that as per the weekly range being between the solid red line and the solid red line, we have broken out. This is accumulation. We've retested these levels of liquidity and we have broken toward the upside. If we take a measured move of the weekly range, again, range high to range low, applied to the breakout, that takes us to a price target of closer to 16,000 or 116,000 US dollars. So we are expecting continuations upwards. With that, we also enter what we would call a low historical resistance range and soon to be potential price discovery. So we could see strong continuations above if we do get a bullish week, particularly for those Federal Reserve announcements. Looking over to the short-term price action, we'll come back to it in a second, we are formulating what we will call a symmetrical triangle formation, which is when we have two equally angled trend lines, one being a downward sloping resistance, one being an upward sloping support. Now remember, these have to be generally equally trending on an angle, and of course, they eventually move towards an apex point. This is more or less a neutral pattern. This is a pattern of consolidation before continuation. This historically is around about a 50% probability of directional breaks on either side. The one thing that determines whether we see continuations up or down is simply going to be the direction of which the price actually breaks. If we see the price break the downtrend, we likely continue. If we see the price break the uptrend, we likely continue down. Now, the determining factor of whether or not we continue up or down is going to likely be the interest rate decision, as the date of the interest rate decision coincides with the apex point of this symmetrical triangle. If we take a measured move of this symmetrical triangle, which is taking the depth from point 1 to point 2, which is the lowest and highest retest, and applying that to a projected breakout point, let's just hypothetically say we break upwards around about the 27th of January, that would give us a similar price point, just under 116,000, as the weekly range measured move does. So we have confluence there of the short term with the higher time frame. If we break toward the downside, we are looking at rejections all the way back down to our POC level, potentially back to 92,000. So we can see the impact this consolidation may have on the price action, which will be perpetuated by the Federal Reserve press conference and the determined course of action moving into the following months in regards to interest rates, which is the most leading factor for perceived systematic risk, which directly influence people's perceptions and decision making in the market, which moves the price action. Okay, let's get that out of the way. So that is what we're looking out for, guys. We're looking at the symmetrical triangle formation. We are watching for a directional break. We are watching the interest rate decision for formulating the narrative, which we'll kind of cling on to moving into February. Hopefully it's a bullish one. Hopefully we see the Federal Reserve come out and they have an overall dovish tone for the future interest rates, and we see the markets progressively move upwards into Feb like we've seen historically. Hopefully we see the S&P 500 break this resistance and continue higher. Hopefully we see Bitcoin go up. That is all hopeful, that is all good to be aware of. But let's talk about the worst case scenarios to plan and be prepared. The worst case scenarios for Bitcoin is if we see corrections sub 86,000. We need to lose 86,000 for Bitcoin to turn high time frame bearish. I do not care what happens to Bitcoin between these prices and 86,000. It is only a loss of that $86,000 region where we enter this low historical resistance range and we run the risk of a steeper correction back to around 69 to 70,000. Only upon the loss of those levels do we turn high time frame bearish. Until then, in any kind of move toward the downside is exhaustion, not necessarily high time frame weakness. If we take a deeper look at the weekly charts, and I'll go quickly over to the weekly charts because I don't have this particular point charted, and we bring up that RSI. Let's just go ahead and bring it up on the RSI. And we take a look at the 62.09 level on the RSI. The 62.09 level, let's go ahead and plug it in. Okay, 62.09, there it is. We can see historically that breaks up and down from the 62.09. We historically see significant price movements in Bitcoin, whether that be, 50, 60, 100% toward the upside or 30, 40, 50% toward the downside. We have always seen very aggressive and strong moves for Bitcoin upon breaking up and breaking down from this level. If we take a look at the prior low on the RSI, that came very close. That came around 63, very close to 62.09, and that prior low on the price action was at 88. So if we come below 86, it is likely we will see a lower low on the RSI, and therefore we will be breaking the 62.09, which could and which has historically been a sell signal on the higher time frame charts. Something to be very aware of. So as you can tell, the narrative we are giving and the narrative we are saying is a lot rests on the upcoming week of price action, and it isn't a game of predicting now. It is a game of understanding. It is a game of preparation, of being aware of the possible scenarios and the implications these events will have on the next 4 weeks of price action. So when they do or do not occur, you can then position yourself to capitalize on the next 4 weeks of price action with a degree of success that is, more probable than not. So that is what we are doing, guys. That is how we are looking at. Let's move over to the altcoin market and Bitcoin dominance. Now, Bitcoin dominance is sitting at 58.85%. And as you know, ever since we've seen uncertainty, look at these dates, we're looking at that, that mid-December period where we saw the Federal Reserve say, well, we're going from 5 to 2 interest rate reductions. We've seen Bitcoin dominance rise. Why is that? Anytime perceived systematic risk increases in a risk asset market, the more speculative assets rotate into the perceived to be, and I say perceived to be, safer investment options. Bitcoin dominance goes up, altcoin dominance goes down. It is all, we always see it. So if we're taking a look over here at the altcoin market and the total market cap, let's start on the total. The total market cap is the representation of cryptocurrency as a whole, and it is bullish above 3.05 trillion. That is a horizontal level of support. That is a prior high. If we lose that level, this will be declared as deviation. We will see a macro continuation, adding further confluence to the loss of our low at 86,000 and the breakdown of the 62.92. Okay, so we have that confluence point. But we also have confluence with the bullish side, because while we remain above this level, we are following that 2021 cycle, and we could see continuations higher. Again, indecision, consolidation, exhaustion doesn't always lead to weakness and downtrends. Sometimes it results in absorption and continuations. That is more likely what we are seeing, provided the monetary policy remains to be more bullish. Looking at the altcoin market, the majority of altcoins on a lot of my levels over here, Bitcoin dominance and Bitcoin isn't showing up. That's okay. A lot of these levels on the total are not probably showing you what you would more or less be inclined to believe to be the case if you were to look at an individual altcoin, because the individual altcoin is getting absolutely decimated in comparison to the total three. Now you're probably wondering, why is that? And now I'm seeing a lot of people on Twitter, come to the same realization we've been talking about for the last few weeks, which is the altcoin market is just heavily diluted. If we take a look at just the total amount of altcoins that are listed on exchanges. Now this isn't altcoins, this is just altcoins tracked on exchanges. We have around 16,000, okay? If we look at 2021, and it's not going to load, we had around 2,000 to 3,000. If we look at 2017, 2,000 to 3,000, 2021 around 10,000, and now around 16,000. But if we look at the total amount of altcoins in general, and I was shocked when I heard this number, it's like 3.4 million. It's even higher than that amount of altcoins. That massive increase in the potential places where money can go, that massive amount of dilution in the altcoin market is why we're seeing the altcoin total market cap continue, but the individual altcoin perform poorly in comparison to the total. That doesn't mean altcoins will not do well in the future, but maybe we should lower, or people should lower their expectations for their individual altcoins from maybe, like, oh, I think my altcoin's doing 1,000x, because guess what? Every single person holding an altcoin thinks their altcoin is going to be the one that does 100x. But realistically, not every altcoin can do 100x. There's just not enough money in the world to do it, okay? So we need to be realistic in our expectations. When I look at altcoins, the point at which I'll be probably entering altcoins again will be upon the breakout of the 2021 high at 3.13 trillion. Break that, I think all altcoins have their moment in the sun again. We'll see altcoins rise again for a few weeks, and then we'll see a sell-off again like we always do. Thanks for tuning in. Have a fantastic day. Catch you guys in the next one tomorrow. Have a great day. Bye.